What's going on, guys? Today's video is going to be about the concepts that I want you guys to focus on and almost like ignoring all the other noise within the market. This will allow you to view the market with much more clarity, get your get the precision entries that you want to get without fearing or stressing, the outcome, and just focus on what's happening. Seeing it with clarity will allow you to observe and react the market rather than assume and predict. Very important concepts. These four right here: liquidity, change in the state of delivery, fair value gaps, inverse fair value gaps, and the overall market structure. To start off, we can look at liquidity. Liquidity, it's simply highs and lows that are resting in the market. At those highs and lows, there are limit orders set for which the bigger banks in the markets are looking to get in, get out of the market, things like that. What it looks like. So we have a high here. Actually, let me get you a better representation. When we're looking at this little line chart here, I know it's not the clearest thing in the world. We have highs and lows all over the place, right? We have a high here. We have a low here. We have highs getting taken out here. Lows getting taken out. It looks like a mess, right? It's not. This here, this is your buy side liquidity. This is the liquidity which is sitting above where price is at currently. Down here, this is where your liquidity is resting below. And it's that simple as well. In the market, when we see liquidity being taken out, say above us, like we do here, we can expect some type of reaction, a move lower, like we get. And within that move, you have your fair value gaps, inverse fair value gaps, change in the states, all of that stuff. And that's pretty much where you take your model and, to target the lows below you. For example, like I said, if you have an inverse fair value gap or a change in the state, say here, you would take your entry right here, targeting these lows, and you would see it play out. But liquidity is probably the most important concept. Once you understand how it works, then you understand how the market moves as a whole and what you can kind of expect throughout the day, throughout the week, throughout the month. But yeah, that's it for liquidity. Take a picture of it if you need to. Moving into the next concept, like I said, talked about a little bit, the change in the state of delivery. I'm going to try to go into the live market here to see if we can get like a little live example. Let's go back like here. A change in the state. Pretty much a clean one. Zoom it back pretty far now. I'm going to drop down to the 1 minute chart. Let's go to this day open. I think we took a trade here. This right here, this would be a change of the state to the downside. And all it is a series of up close candles. You have these three candles right here, these blue candles. And then a series of down close candles closing below, which is right here. And that would be your change in the state. For an uptrend version, a bullish change in the state would be here because you have this series of down close candles getting closed above. And what did we do? We did come down and sweep the low, but overall we are moving higher. After this close below, we are moving downwards. And change in the state, it tells you which way the market wants to flow as a whole, and overall what you can expect. So yeah, that's pretty much it for the change in the state. It tells a story. It tells you a lot about, like I said, the market's future plans and what it wants to do. And it's a great entry model as well, once you lined up your other confluences within whatever your entry model is. Next, fair value gaps, inverse fair value gaps. These are my favorites, and I pretty much base a lot of my model around. You have regular fair value gaps and inverse. What I like to see for a fair value gap, or what is a fair value gap? It's a volume imbalance within the market. So if we see a candle, let's make this black or something. Your wicks are here, right? And then we have another candle here. And then another candle here. What a fair value gap is, so we have a tiny wick here, then another wick here, so it goes down here, whatever, wick, wick. Your fair value gap would be here. This is what a fair value gap is. It's the volume imbalance between the two wicks of the three candles. And I will find a better representation of it in the actual, on the charts, just because it's much easier to see rather than me making a crappy drawing of it. Let's zoom in down here. Fair value gap, right here. And once you see the actual gap, you will not unsee it. It'll become much clearer. And right here, you see the wicks, these three candles right here, boom, boom, boom. Your wicks of the outer two. In the inner one, you have empty space. Now say if this wasn't here, and it's just right here, then you'd be joking. Okay, right here. Right here you have the empty space, which is the volume imbalance, which I can expect price to trade back to, which we do here. And then what do we do from here? We shoot up all the way. Boom. After we respect that fair value gap. So in this case it would be a bullish respected fair value gap. Now we can look for an inverse value gap. We get one. Let's go down to 1 minute. It's a little easier to see. Right here. This again, 1, 2, 3. Imbalance put in here. It's a fair value gap until you see a down closed candle closing below it. So right here, when it closes, it becomes an inverse fair value gap. A lot of times the market will like to come back up to it to respect it again before making its move lower, which we do here. It's pretty simple concept. Once you see it, you won't unsee it. Again, it's 3 candles, that imbalance left between it, right here. And again, in this case, this would be a bullish fair value gap being disrespected, so it becomes a bearish fair value gap. There's that. Simple concepts, very effective. Once you master them, you will learn to ignore all of the other noise within the market. Lastly, market structure. Very important as well. We can draw out a little thing right here. Okay, what we can take out of this here, overall market structure, we could say this is maybe on the 15-minute time frame. I like to view it as an AMD model: accumulation, manipulation, distribution. So we have our push up. We make these highs right here. Remember liquidity, right? This is your buy side liquidity. Pretend this isn't here yet. Pretend it's that's irrelevant right now. We're looking at the move up and the move after. So our move up is here. We have this choppy, crappy price action that we don't like to trade in. It's called accumulation, which we don't like. Market structure is very, it's not volatile. It is extremely choppy. It almost looks like a barcode when you view it in live markets. And you don't want to trade, you want to stay away. But after accumulation, we expect manipulation, which would be this leg up right here. So we look at it from here. Accumulation, manipulation. A lot of buyers will be looking to get in here, but what they don't know is that it's a manipulation leg, and then we can expect our distribution move to the downside. And in that case, you'll have a fair value gap getting inversed. You're changing the state being put in, and then you enter your model targeting the lows. And yeah, that's market structure as a whole. You know what happens in there, you look at with clarity. Like I said, you look at observing and reacting what's in here rather than assuming the outcome, which is this. But again, AMD, engrave that into your brain. Accumulation, distribution. Spell. Those are your three things right here. And that goes under market structure. There you go. Okay. Other than that, not much else. Those are the concepts I like to look at every day, every week, every minute. You know, it's just I like to tune out all the other noise that you don't need within the market. And once you can understand these four concepts and understand it down to a T, then you're kind of in that golden spot to where it's just your psychology that needs, you know, the upgrading, the proper mental state you have to be in to trade matters more than the skill itself. And I'm gonna make a video on psychology and kind of like give my perspective on how I got to where I am now, what I had to go through, what helped me, what pushed me, all things like that. That might be my next video, to be honest. I love the idea of psychology, applying it to the real world, applying it to the now. And there's a couple concepts in the psychology world that I really like, and I'll definitely share it with you guys. It's gonna help you a lot, I think. And yeah, that's pretty much it for today. Remember these concepts, practice them, view them, backtest them, whatever you gotta do to get it engraved into your head. Do it. And that's pretty much it. Until the next video, stay safe. And yeah, peace out. I'll see you in the next video.